To my channel, my name is Neeraj Lahoti. You're watching Neeraj Decodes. So today I'm gonna review DMart, or you can also call Avenue Supermart numbers, H1FY26 results, or also you can call Q2FY26 results. Right. So let's quickly start with the review now. Let's first go to the P&L account, consolidated numbers. These are first thing to remember is. Okay, so revenue from operations 16,676 crores versus 14,445 crores. Last quarter was about 16,360 crores. So excellent jump YOY, 15.5% odd growth. Quarter on quarter roughly increase at about 350 odd crores. So significant jump in revenue, that is 15.5% jump in the revenue YOY. Okay, that's an excellent number for a mature company. Now that sums up the total income part, because you really do not have anything to discuss in other income. Now let's quickly go to expenses now. 15,751 total expenses versus 13,575 crores last year. So if you also see the increase in the expenses, that roughly is about 16%. So the gap is about 0.5%. So I can say increase in expenses is higher than increase in income. So expenses are increasing rapidly when compared to your income, with a slight gap of with 0.5%, right? So if you can say now, if you can more discuss about it, my profit margins will shrink. My absolute profit number may be still higher, but my profit margins will definitely shrink. Okay, so let's check that in your profit number. But now let's quickly go to profit before tax. That's 945 crores versus 903 crores. My last quarter numbers were 1057 crores. So decline in profit before tax quarter on quarter, year on year a slight increase about 5%. Now let's go to tax expenses. 260 odd crores versus 280 last quarter. Last year is about 244 crores. Okay, now let's quickly go to the important number. Profit after tax 685 crores versus 660, if you can round it up, and 773 last quarter. So last year, if you compare, it's an only increase of 30 odd crores. While my revenue has increased 15.5% on a pace of 15.5%, my profit is only increasing by 4 odd percent YOY number, right? So that's what I said. So your margins are shrinking. Let's see how the margins are shrinking now. So these are the numbers. Now let's quickly go to the review. Okay, so if you see here, I have just the margin numbers. So PAT margins stood at 4.1% Q2 FY26 versus 4.6 Q2 FY25. So last year PAT margin was higher than your current quarter margin, right? That's what we talked about. Okay, EBITDA margin 7.6% versus 8.1%. So that's also a bad number, right? So margins are on a lower side and revenue is on a higher side. So mixed set of numbers, first impression, right? Now let's quickly go to other things that we'll have to discuss. Now key product categories are, if you see the share of revenue. Okay, so last H1 FY26 is 57.5 versus 56.40. So roughly about same share in food segment, food product category. Non-food is again on the same side. So if you see all the numbers, 20 and 19, 23 and 23. So share of revenue in general merchandise and apparel, non-foods, that is FMCG, and your foods, roughly same pattern. So you're following same pattern, nothing new to really see in this particular slide. Now let's quickly go to the important number and important slide. That's year-wise store addition, right? So year-wise store addition, if I see, I've added more 17 stores in H1 26. So now my total stores are about 432. Last year was about 415. So this is one number that you'll have to look after. But the most important number of this result is this number. Is what? This. Same store sales growth rate is about 6.8%. So these are stores which are more than 2 years old, which you have opened, and the same store sales growth is roughly around 7%. So it's a good number. That means your consumer are still your consumers who are already your pretty old customers are still with the same company, right? So this sums up your financial summary now. Revenue, if you can see, H1 FY26 is significantly higher than H1 25, but margins are declining, right? EBITDA margins are declining. H1 25 was 8.4, now I'm standing at 7.9. So that's a bad number in front of, if you see, compare the margins. Now PAT margin again 5.5% that we discussed about, and 4.9 now, right? So that's a bad number. Now a slightly good number is net cash flow from your operations, 84 crores last H1 FY25. Now you're standing at 2021, so that's a good number again, right? So now let's go to DMart. Ready, focus on large towns. Now DMart is present in about 24 cities, right? That was the last H1 FY25 number, that was around 24 cities. Now if you are only standing at 19 cities, that means you are ceasing your operations in 5 cities. Those are what? Those are Amritsar, Belagavi, Bilahi, Chandigarh and Ghaziabad. So 5 cities you are ceasing off business, and you have added stores, about roughly about how many stores if you added, 17 stores you have added in H126. So these are the your H1 FY26 numbers of DMart. Do comment down how do you feel the numbers. I feel revenue side, that's a very good numbers that you have also seen in your quarterly business update from the company. But profits margin, really disappointed with the profit margin number. Somewhere either the input cost you'll have to manage, or whether the new same store, whether the new stores that you've opened, probably they are not giving you the numbers that you want, the profit numbers that you want, or the revenue numbers, whatever you talk about. So they're still not generating profits or otherwise, right? So that's what DMart has to more focus now on. Overall mixed set of numbers, revenue good but profits are not good. Now let's see how the markets react to these numbers. Already the market has reacted on the quarterly update, but let's see a total reaction. I feel it's on a bad, no, not bad, but not that great set of numbers from DMart. What we expected, we were talking about consumption story and all, but that somehow on the revenue front, I saw that revenue side number, but then maybe it's industrial peer pressure or the input cost increasing only because of the higher cost or the inflation number in the raw materials. But you probably probably the companies are not passing on that number because you are not a manufacturing entity, you are just a retail store. So that's what this sums up the story of DMart now with these numbers. So I feel the even the FMCG numbers are now important because the revenue growth is high, so probably the FMCG numbers should be good. Okay, so that's it with the DMart numbers. Do comment down how do you feel the numbers are, and I'll again come up with some good numbers as and when the results are declared. That's it for this video. Bye and Jai Hind.